July 21st, Federal Reserve meeting coming up this week. What will happen to longer term bonds? I'm your host, Bill Noble. This is Toby.
Oh, no.
We're going to talk about bonds and interest rates. First, a little education. So in the world of interest rates, people don't know this, but the Federal Reserve only controls the rate for overnight lending between banks.
Mm-hmm.
And all other interest rates derive themselves organically through the market, right? Like
Yeah.
plants growing in the jungle.
Yeah.
Now, long-term bonds can be wild. They don't have to follow the Fed. So as you said, your call was for the Fed to be done with hiking interest rates coming up.
Oh, well, no, that wasn't exactly what I said.
That's not what you said?
I think it was a month ago. I said there'll probably be one more hike and then it will be the end.
Okay, so right.
Yeah. So a month ago. Yeah. And I don't keep track. You do. That's why the other day I asked you, I go, did they ever do that hike? I am a beautiful, ignorant soul.
All right. So coming up, your bet is that that's the last hike.
Well, we can pull a card. We can pull a card. I think I felt like before it was their intention they were going to. I don't know now, but I can pull a card if you like.
Okay, so let's review. Is the Fed done? Will the interest rate hike cycle end? And then after that, we'll do bonds. Is that cool?
Sure, works for me. Did you want to do more educational?
Okay, well, when we get to the part about the bonds,
you're gonna mansplain it to
me. We don't do that here. We're unhinged, but we're not, whatever. Okay, we don't do that. Okay, so we got to do the Fed. we gotta do the Fed, and then we can do longer term bonds.
Okay, I'm just gonna pull one card on those.
Okay,
let's just do
all right.
We're gonna split it, pop it. Ah, what an interesting card to come up. So we have got the 6 of coins. Charity. Charity begins at home. Now, the most interesting thing about this card is if you're feeling flush, right, then it's a reminder to share the wealth, right? If you're not, then it's don't be afraid to ask for help when you need it. So the weird thing about this card is it's almost like it's not giving me an answer, right? It depends on how the Fed feels. Maybe you have a bit of insight on that. Are they feeling like they need more help? It kind of feels like they are. I think they feel insecure. I mean, I've heard, I don't watch a lot of news, but I have heard that the feeling is that inflation is starting to stabilize or go down from where it has been. There's some indexes which are all made up numbers anyway, but it's all about how people feel, right? Okay. So if they feel secure that they have a handle on the inflation thing, obviously they're not going to. I feel like probably not. Let me pull another card. Let's see if I can get some. Yeah, they're worried about the future a lot. We've got one of your favorite cards. Wands. I love wands. Swords. I mean, not wands, swords. Nine of swords. I love swords. Yeah, they're all about. This card is all about the scary dreams that keep you up at night. Yes. But it is all imaginary. Obviously, we're living in the Matrix. This is the game we're playing.
Value is 8%.
Yeah, so I would guess, and I did say this, but I think it was actually over a month ago when you'd asked me about it.
Right. That it was actually exceeding us about.
Well, that was the reading, and then after that, we did one was a conversation, and I was like, yeah, there'll probably be one more before things really stabilize enough for them, because they have to be extra super duper secure, right, in their mind, right? Yeah. So let's see what happens. Okay, for me, the cards are saying probably gonna be another hike.
Right. So they're gonna do another hike this week, but it's interesting that they're getting kept up at night and they need help. Now, what helps stop inflation? rising long-term interest rates, like the 30-year mortgage rate, that comes from long-term bonds. Now, one of the ways that long-term interest rates can freak out,
Yeah.
or long-term bonds can freak out, is when commodity prices rise.
Oh,
So
that's
this
interesting.
week, wheat, right, oil, right, a lot of geopolitical stuff going on.
Mm-hmm.
So if commodities rise, yes, that would freak out the Fed, but that might actually bring in the cavalry for them of lower bond prices and higher interest rates long term,
Okay.
right? They don't necessarily have direct control over
Okay.
that. Okay. So they do need help from long-term interest rates. Okay, but higher long-term interest rates, it can make the Fed happy because it makes inflation go down. But anything that makes inflation go down can hurt risk assets, stocks, crypto. So that's why I'm interested in, what are you hearing or seeing about long-term bonds, right? Is this going to move from the purview of the Fed to the purview of what they call Mr. Market or Mrs. Market, meaning that long-term bond market? Are they going to be the ones to come in and, potentially steamroll inflation by freaking out? Like long-term bonds, I worked in that pit a long time ago in Chicago when that was all done by humans. I mean, they call it the long bond. Back in the day, that was the aorta of the financial markets.
Oh,
That's what pumped. That interest rate pumped the blood through the system.
So what would you say? What would you say is the aorta of the market right now?
Well, it's probably S&P, right? Probably the S&P 500.
500.
In other words, interest rates drove stocks back then, and now stocks are so big, really,
Yeah.
and so popular versus say even the 90s.
Yeah.
Right. Bonds ruled the roost back then, but it's all about stocks right now. Now, of course, long-term bonds always reserve the right to come back in and,
Well, bonds are boring. Stocks are sexy, and crypto is crazy.
right. But when the bond market, they call them the vigilantes, right? Bond markets correct excess, or they have been in the past. So,
So what is your question?
So my question is, if the Fed is done, what are the bond market vigilantes going to be? Are they going to take long-term interest rates higher, or is everything, kind of copacetic?
Refusal of the gift. Four of Cups. Such an interesting card because there's, as you see, it links with the Ace of Cups, because there's a gift being given, but the receiver is like, yeah, not good enough. I don't want that. I don't want that. So that would be the attitude right now. It's that, and also as I was shuffling, lovely devil card came up. Love him so much. Yeah, so the devil card is all about what are we addicted to? What is potentially hurting us that we will not free ourselves from? And then we have this, and it's this not good enough idea, right?
Right.
That the things that are good for you are not the things that you want or are sexy, because it's the devil card. I'm going to say that. Right. I have no idea what this has to do with bond markets, but I don't think they're very sexy. Let me just pull one more. So there's a choice to be made. Yeah, a decision. Really beautiful. Justice is blind. So at this point, it looks like it feels like nothing is really going to happen, because this is also called the truce card, right?
Okay.
So things are solid. Things are in. It's not really balanced, but truce, you know,
Okay.
it's, oh, so nothing is going to happen for the moment. It's solid.
Right, because there's another theory in bonds that people that run big pension funds that are conservative
Mhm.
are just gobbling up bonds because they have good returns now. They have like 4 and 5% interest rates. So big pension funds are like, well, I don't really care what happens with wheat and oil. My job is to have 60% stocks and 40% bonds, and I'm gonna load up my bond basket
Because they're on sale.
because they're on sale,
Yeah.
right? So I mean, people are like, well, our bond's gonna get, our bond's gonna get hurt, or our bond's gonna just sit. And I think you've answered that, right? Or
It
no?
looks like sit.
Looks like sit.
Mhm.
Okay, so 60-40 guys winning in the bond market. Good news for speculators.